Which one do you think is the most overlooked by investors? I'm just curious what you think.
It's a great question. As a new investor, I have to say that depreciation is something that.
Why do you think that? I'm just real curious.
So the tax code in the United States is, I don't know how many thousands of pages it is. I almost think it's by design to be complicated. The tax code as it stands right now it seems to be like it's written for people like us that are investing in real estate. So these are basically losses. Depreciation is a loss that you could take on paper, not a physical loss or something that, a cost that you physically need to gone. This is just allows you to save money and not pay taxes on some of your profits and cash flow.
Yeah.
Again, as Rich Dad Poor Dad said, week one, it's not what you make, it's what you keep. So depreciation allows you to just basically keep more of your earnings, keep more of your cash flow month over month. And, so many lay people and even investors just aren't quite aware of how depreciation works and just different strategies like that you can use with that.
Just to piggyback once again, think that depending on the asset class you're in, 2.9% or 3.9% a year, you have to take that. Like the government makes you take that in depreciation. So that makes an investment you took on 2.9% or 3.9% better every year. So I agree. I think it's something that they want to stimulate the economy. The government understands that investors are stimulating the economy, providing housing, and it's really a benefit that they give you. So I totally agree. I think that's really important. I think we beat that point up pretty well. Let's look at a point that Brand Turner beats up. He hammers on the concept of cash flow. So for a listener looking at the first duplex or first single family, what is Turner's minimum standard for, say, acceptable monthly cash flow after all expenses? Would you get on that?
There's a number of different things that you can. What's your hurdle? Like, what are you looking to do? Oh, so many people like to say, okay, what is a U.S. Treasury bond? What is that yielding currently? Somewhere around 5%. So with that, if you are investing in a property and you do all your underwriting, you do all your mathematics, and you know exactly what you're going to pay in taxes, you know what you're going to pay in principal, interest, insurance, etc., and it turns out that you're only making 5%. Well, it seems like a lot of work to make 5%, where you can just shut your mind off, buy some treasury bonds, and forget about it. So to that point, doing all of your underwriting process and finding out what a cash on cash return is, return on capital. It should be, especially using leverage, it should be higher than regular products that your typical bank will offer. So the thing that I really do like about residential real estate investing, it's almost like insider trading. Insider trading is almost legal. Of course, we all know that if we're investing in stocks, bonds, and mutual funds, and we have disclosed information that we shouldn't be hearing, we'll go to jail.
Yeah.
If we do any insider trading, we'll go to jail. Now, the interesting thing for me in residential real estate is, you can try to research that property as much as you want. The taxes are public records. You can really almost, in a sense, do some insider trading and really niche down into the city and then the neighborhood and then the actual street of where you'd like to buy. And you can become a lot more successful than I think you can in stocks, bonds, and mutual funds. A lot of the traditional investments that people like having in their portfolios.
Yeah, man, you brought up some great points. I hate to say I agree with you again, but looking at residential real estate, if you have a 5% return, but do you take into account a 2.9% depreciation? It brings that 5% to 7.9%. Do you take a 3% appreciation a year in the neighborhood in the asset class? So now you're 7.9, you're 10.9. So you take something that's okay, and because real estate is so forgiving and so many benefits to it, you can have almost 11% return on something that on paper would be 5% from a cash standpoint. But because you have those other factors, and he talks about that in the book a lot. I really enjoyed that. So yeah, once again, I think that's great. I think residential real estate investing, you can do a lot of different things. I totally agree.